Justin, thank you very much for joining us today. It seems like every time we get together, there's so much happening within the uranium sector, and this is why I like it so much. And the biggest news of late was the press release from Kazprom stating that they would miss production targets for 2024 and 2025 due to a slowdown in construction and also the inability to secure sulfuric acid. I didn't realize this acid was so important, but anyhow, and I have to commend you on your comments. The last time we spoke in October of 2023, you were actually discussing this, and you said it would be next to impossible for Kazprom to meet their 2024 and 25 production numbers due to these very reasons. So you were way ahead of the curve. And I'm actually going to put a link in the show notes below so viewers can check that conversation out. But I want to get your thoughts on what you think of this current press release and what this means to future production.
Sure. Thanks, Jimmy. I appreciate you having me on again. Yeah, it's quite the development, and probably the most important development in the uranium sector to discuss and to consider if you are invested or considering investing in the sector. And that's because Adamprom is the largest producer of uranium in the world, and Kazakhstan on a 100% basis is unparalleled. They produce almost 60 million pounds a year, which is about 40% of the total global uranium production on an annual basis, at least for, let's say, 2023's numbers. So if the largest producer is missing production or even buying uranium, that's a massive, massive development. And it's very important to understand and to take that information in. For Q3 of last year, it was pretty obvious to us that they would be missing their targets. And the reasons for that essentially were that when they came out and reported on Q3, they actually revised down their total 2023 capex. And something that's important to understand with ISR production, and in particular when we're talking about Kazakhstan, because it's so well established and the data is so well established for timeframes of investment, of wellfield development and production, where you have the actual wells that are being drilled for this ISR production in Kazakhstan, you have a delay. So the first wells that are drilled, whether this is expanding into an existing deposit or drilling out a new deposit, it doesn't really matter. There's differences in terms of sulfuric acid usage, et cetera. But either way, a well field is drilled out. It's that ore body is impregnated with the sulfuric acid that has to interact with the uranium itself. That takes time, and then it's extracted through the extraction wells. And that process from this first well is drilled to the first production is about 8 months. It's a little bit longer, depending on the timeframes, of course. So they have very, very harsh winters. They do very little drilling in January, February, and December, in that order. But 8 to 10 months for first production following the wellfield development. Then they get to full production about 18 months after that first wellfield development. So you have this pretty steep incline in production rates from the particular wellfield after it's drilled out and injected with the acid. From there, it declines really quickly. So they have to constantly drill, constant drilling. It's not like you build an underground mine and you incrementally bore out the ore and extract it to the surface. This is a non-stop process for the ISR development, ISR production. So if they're saying that their production is going to be 25,500 tons for 2024, and their production for 2023 was 22,000 tons. That's 3,000 tons. That's almost 8 million pounds of uranium increased production. You're going to have to see a relatively large jump in capex in order for that to happen. You're going to have to actually see it on paper that they're doing this work and they're doing more drilling than what they had done the previous 6 quarters, let's say, to get the production that they would have at that current time. So 2023's production essentially is a result of the capex spend from late 2021, early 2022. It's pretty basic. So when they say they're revising the capex down in their Q3 reporting for the total year 2023, it's very easy to say they're not going to hit these targets. And not only are they not going to hit these targets, I think for this year, for 2024, it's likely they're barely going to even produce any more uranium than they did in 2023. So, I didn't highlight shortages of sulfuric acid or problems or delays, let's say, in the actual construction and development of these new projects. But it was just a simple look at the capex. If they're not spending the money, it's not coming out of the ground. And that's just, very easy A to B analysis. And so that was an easy call to make. I wasn't the only one that made it, but I was pretty vocal about it because I think it's a huge development. As soon as that news came out, of course, it set the sector alight, and we've seen, you know, big returns this month, year to date already in the uranium sector. So I was happy to see that. It's not great news for the sector, for the utilities, because the entire uranium sector and nuclear industry is relying on increased production from Kazakhstan as the primary increase in production that they can rely on going forward. Because compared to developing new greenfield underground mines like DASA or Arrow, or even the ISR mine Phoenix from Denison, these are going to take years and years and years and have a lot of risk, a lot of development risk. Whereas an established producer that massively ramped from the mid 2000s into the mid 2010s, you would think that it would be relatively easy for them to increase production. Well, guess what? It's not. So that reality is slowly setting into the nuclear industry. The investing community, as always, sees things earlier. And the investing community has been right about almost everything from the bottom of the commodity in 2016. Been right about the fact that as prices rose, inventories would dry up, not become more liquid. Absolutely happen. Would be right about the fact that this structural supply deficit would equal rising prices. I mean, it's pretty basic from a commodities investing standpoint, but for some reason, the nuclear fuel buyers left the miners to hang out dry for a decade. Now the results of that are coming to fruition. It's an extremely supply constrained environment. I think we're entering into a fundamentally different investment. From this point for the next few years, it's a fundamentally different situation, a fundamentally different uranium market, and it's going to take a little bit of time for the nuclear fuel buyers to accept this new reality and do what they have to do to secure supply. And that's where I think we are right now.
Interesting comments. And I just want to put all this into perspective. Kazprom, their previous guidance for 2025 was they were going to produce between 30 to 31,000 tons of uranium. And what's the estimate for 2023?
Well, 2023, they were shooting for, I think, 22.5 to 23,000 tons. I think they're going to come in right around 22,000 tons. 2024 for this year, they were estimating 25,500 tons, or roughly 10% below their subsoil use agreements. So it's about a 7 to 8 million pound annual increase on a 100% basis. So 100% is Kazprom and all of their joint ventures. The bulk of those are with Russia and then China, but they have a JV with Cameco, they have a JV with the French, a couple with the Japanese, and then China and Russia has the most JVs with Kazprom. So those are their targets. 2025 for 30.5 to 31,500 tons, or 80 million pounds, or a 35% increase in production over their existing production levels, is pretty much laughable. It isn't going to happen. And this release that they put out a little less than 2 weeks ago basically called 2025 into question without really coming out and saying, we're not going to be able to do this. They're saying 2024, it's unlikely we're going to hit our targets, and possibly for 2025 as well. Well, the main thing to understand with the 2025 targets are the bulk, about 2/3 of that increased production, that almost 20 million pound increased production that they're expecting for 2025, a big chunk of that is coming from the Budenovskoye 6 and 7 mines. This is a joint venture with Rosatom. This was established in December of 2022. We believe this is one main reason why a lot of the C-suite left the company following this deal. They did not want this to go through, but of course it went through. This is a very, very large deposit, and it's going to take a lot of time, a lot of money, and a lot of sulfuric acid to get into development. I believe that there are delays there. But the interesting thing is, with this deposit, even though it's a 49% ownership JV with Rosatom, this deposit, all of the uranium on a 100% basis, so Russia's side of that production and Kazprom's side of that production, is already committed to Russia for the first 5 years of production from this mine. So this big increase that they're saying they're going to be able to accomplish, which eventually I believe they will. They're building their own sulfuric acid plant. It's going to be operational supposedly in 2026. Then you have that increased acid going into the deposits in an additional delay. So we're probably looking at a big increase in production, maybe 2027. All of that uranium for the first 5 years going to Russia from both Kazprom and Russia's JV part of that deposit. So this does nothing for Western utilities, which are largely undercontracted, especially compared to the elephant in the room, which is China. And China has been the most aggressive buyer in the world for the past 24 months. Why this didn't absolutely wake up all Western utilities out of the slumber they've been in, I don't know. It's quite confusing to me, but here we are.
Very good points. And I want to ask you, I want to do a deeper dive on both Russia and China. But before we do that, I just want to clarify something on sulfuric acid. This is something I know nothing about, but have you done much work on this? Is it truly a hard commodity to secure?
It's not necessarily that hard to secure, but a lot of their sulfuric acid comes from Russia. And as we know, over the past couple of years, we've seen some interruptions in supply chains. We've seen difficulties in shipping to and from Russia on a global basis. There's been some exception to that because they share a large border with Russia and are, I believe, still have a lot of influence, state influence from Russia for Kazakhstan. So there's been some interruptions to those deliveries, but that's not the big reason necessarily why they're missing the production is shortages of the acid. In my personal opinion, based on the work that we've done and by the work of some of our contacts in the industry have done, is that they're facing decline rates on most of their established projects. And this is something that happens in mining, right? In every single commodity, every single sector, a new deposit is developed, it is always high graded. So what that means is basically you go after the highest grade portion of that deposit first. And that's always how it's done. And so this is no exception in Kazakhstan. And over time, these mines deplete. That's just what happens. It's a limited resource, right? So a lot of these mines are depleting. Now, what I believe has happened is that Adamprom has overfilled their contract book, and they signed, basically, to put it simply, they signed too many contracts over the past few years, and it hasn't left them a lot of wiggle room. So as this Budenovskoye 6 and 7, and then the French joint venture, the Orano joint venture, South Torqueduc, as these two deposits are being slowly developed, and those are having delays, the existing deposits are facing decline rates that take more acid to maintain a certain level of production. So as the deposit declines in grades, essentially, and as uranium is pulled out of the ground, it takes more and more acid to produce the same amount of uranium from these existing deposits. And you can actually see that in their numbers. So you can actually look at their expected production and their expected sulfuric acid usage and do the math on that. And you can say, oh, well, it's going to take about 20% more sulfuric acid per pound of uranium produced going forward. Part of that is the decline rates of existing deposits. Part of that is the actual impregnation of these new deposits, the Russian joint venture, the French joint venture. So it's going to take an enormous amount of acid, and they just don't have enough. So in between now and when this new sulfuric acid plant is built and these two new deposits are developed, they're going to have to use more and more acid just to maintain production on their existing deposits. That's what we're seeing right now. That's why we basically know it's impossible for them to increase production to the extent that they're saying that they will. Do we feel like they're essentially lying to the market? Not necessarily. Are they being overly and potentially irresponsibly optimistic? Yes. So we have, Kazprom also is facing a similar reality that all of the producers are facing. Cameco, Orano, Uranium One, they're all facing the same reality, which is these legacy contracts that they've signed in the late 2010s into the early 2020s, when it was still, even though we had a rising price environment during that time, uranium went from $18 a pound, 2016, and was incrementally rising, higher highs, higher lows into the 30s over the following, 3 or 4 years. It was still very much a buyer's market. We had an abundant above ground mobile inventory. A lot of carry trades were being done. And in order to sign contracts, especially for Cameco and some of these producers that were not ultra cheap producers like Adamprom and the Kazakh joint ventures, they were signing contracts, and they were giving these kind of bonuses within these contracts, which are flex provisions. So they would allow the utility signing a contract with them at the time of delivery to decide to receive more or less uranium, sometimes up to 20% more or less than the contracted amount. So if you imagine you're in a bear market, you sign a contract in 2013, $40 a pound, it drops down to $25 a pound at the time of delivery, and your contract is, let's just say 50-50 market reference fixed price. What you're going to do is you're going to flex down. You're going to take less uranium from that producer because you can go ahead and go into the spot market and top up your inventories at a much lower price than that fixed price of that contract. So bear market, flex down. That happened during the bear market. That actually created more supply into the market because if you're Cameco, you signed a contract in 2012, you're delivering in 2015, your buyer is flexing down, you have more uranium, right? Your inventories get bolstered, maybe you sell a little bit on the spot market. Cameco is not really a spot market seller, but you get the point. Then the tide turns. Now we're in a bull market. Contracts that were signed in the late 2010s with a fixed price of $35, for example. Then it gets delivered in 2023 and you've got a spot price of 50, you're going to flex up. You're going to take as much as you can out of that contract that will allow with that flex provision because it's cheaper than what you can top up in the spot market. So every utility that's been delivered uranium in the past 24 months has flexed up on their contracts to the extent that the contracts allowed, and every producer is being squeezed. Their inventories are declining. In this past year, we've seen producers come into the spot market. Adamprom, THK, trading house Adamprom has been in the spot market. Cameco has been a buyer in the spot market. The Russians have been in the spot market. The Chinese have been in the spot market. Everybody is buying here. Even the producers, the biggest producers in the world, are competitors with their clients. This hasn't happened before. I want to make this really, really clear. We have had fluctuations in primary production in the uranium market over the history of the uranium market, okay? It's been very volatile. We've had an oversupplied market for one period of time that was essentially the 80s from primary production. But from that point on, we've been mostly at a deficit for primary supply with enormous secondary supplies. The Russians were enormous sellers into the market from the mid-90s into the early 2000s. We had megatons to megawatts, 20 million pounds a year for 20 years. Enrichment underfeeding for another 20 years. That basically is not totally ended. The Russia is still doing, but staying in Russia. This is a market with very, very little secondary supply, a huge primary supply deficit, and the producers are competitors with their clients in the market. This is new territory. It's a fundamentally different market. I think it's going to get pretty wild in the next few years. I don't know what's going to happen. We're going to have competition between buyers for the same pounds. We're probably going to see some force majeure and some contracts not being delivered on. That's really how tight it is. What is uranium worth during that type of environment? We're about to find out.
So I want to ask you about Russia and Rosatom and also their activity in the spot market. And one of the interesting things about this company is that they will look at every aspect of the fuel cycle for a client. They will build the nuclear reactor. They'll look after uranium enrichment conversion services, and then we'll also look after the waste. And they currently have 18 projects on the go, and they're going to need a lot of uranium for those projects. And as you alluded to, there's chatter that they are short uranium, that they've been buying in the spot market. What have you heard exactly?
They have the largest nuclear export business in the world. Like you mentioned, they have 18 projects that are in various stage of being built, whether that's planning or actual construction across the board. And they have to fulfill into those promises, those contracts that they've signed with the buyers, the developers, whatever country is purchasing these exports. And Russia is short uranium. So they don't have a lot of in situ resources in Russia. They don't have a lot of uranium in the ground. They have a few mines in Russia. Their best assets by far are their joint ventures with Kazakhstan, with Kazatomprom. And they have huge enrichment capacity. And to the extent that they can actually produce uranium from underfeeding, which, you know, if you're a nuclear utility, you can essentially buy enrichment for uranium. If you can buy EUP or enrichment, you don't have to buy uranium and conversion. You can just buy enrichment. And that's been very constrained in the Western market, especially over the past 18, 24 months since the invasion of Ukraine. But Russia is short uranium. So they are aggressive buyers. That's one of the reasons, one of the main reasons, in my opinion, why they potentially force this 49% joint venture with Kazatomprom for the Budenovskoye 6 and 7. It's a major, major deposit. But it's just one element of a very complex set of variables that a highly reliable, large producer of uranium enrichment, Russia, is now a buyer in the market. It's the same thing with the Chinese, right? The Chinese, in addition, you didn't ask me about China, but there's similar dynamics here. While Russia is not building a large amount of reactors in country. They are exporting, so the demand is similar, right? China has 25 reactors under construction right now. 25 under construction right now, and almost 200 in the planning and proposed phase. They think and act differently in the market than any other entity. They think long-term. They are mostly price insensitive. They have an enormous inventory of uranium. They have 600 million pounds of uranium held as inventories. Now, this is a critical state-owned asset held by state-owned corporations that are building these nuclear power plants. It's highly unlikely they're going to be parting with this fuel. They're not in this to take profits in trading this material. This is highly, highly strategic, very, very important for state security, why this inventory is so important to them. Now, the Chinese entered 2 huge contracts with Kazprom in the last 18 months. Very, very large. They were so large that on balance, for each Chinese entity entering these contracts, that would equal more than 50% of the book value of Kazprom. And there were 2 of those, about 6 months apart. I don't know why this didn't absolutely shake up the Western market. But they're huge buyers. Like I said, they've been buyers in the market. They've been buyers in the spot market. They're marginal spot market sellers for the previous few years. This last 12 months, they turned to buyers. We've seen just recently that the Chinese visited Uzbekistan and made another uranium deal. Uzbekistan is sort of like Kazakhstan light. They're aiming to increase their production. They're producing about 10 million pounds a year right now. They're shooting for 15 to 20 million pounds by the end of the decade per year. The French have made deals with Uzbekistan. The Chinese are now in there. It's sort of kind of a land grab between China and Russia to the low-hanging fruit of uranium, and they're beating the West to the punch. Very, very important to understand that the West is not necessarily asleep at the wheel, but they're late. They're late for securing uranium going out into the next decade. And the Chinese are beating, as well as Russia. Russia's making sure that they're covered for these exports.
Yes, and you mentioned Uzbekistan. I believe it's the 5th largest producer of uranium in the world now, according to the WNA, and it's only going to get bigger. So that's great detail on Kazprom. Now I want to ask you about Cameco. We haven't heard a whole lot about Cameco here in the last few months since they came out with a press release. I believe it was in September, saying that they were having production problems at Cigar Lake, and they're due to report here on February the 8th. What are your thoughts on Cameco, and what are you hearing?
Well, this is going to be interesting because the Cameco conference calls are probably the most attended events in the uranium sector for uranium investors. And it has more to do with their market commentary than it does their actual earnings, right? So nobody's really paying attention to their earnings for the most part. I mean, to some extent, certain analysts are, but the uranium sector they want to read the tea leaves from what Tim Gitzel and Grant Isaac have to say, right? So we believe they're going to report that they missed their targets for 2023. To the extent that they discuss going forward for 2024 and call into question production targets for this year, we don't know. Usually Cameco puts on a brave face. They don't really like to tell the market about problems that they're having. But what we're hearing is that they're facing some difficulties with their mining projects as well. And their existing mining projects, right? That's primarily in Saskatchewan, Cigar Lake, and McArthur River. Cigar Lake, we know, based just on the analysis of the mine, the deposit that has been done over the years, that it faces decline rates as well. So phase 1 of Cigar is set to basically be done with producing at the end of the decade, 2028, 2029. The company says they're going to move on to phase 2. Our understanding is that phase 2 of Cigar Lake is lower grades, higher cost production. Will they be able to get it done? Probably. But it's another example of a primary reliable producer with established mines not meeting their production goals. So what this really does for me is call into question all of the greenfield development projects, because they're just not going to come online on time, on budget. They never have, they never will. And if the primary producers are running into problems, the secondary, the greenfield production developers are going to run into similar problems. These are supply chains. These are shortages of skilled labor. The biggest producers in the world are having this problem. Why can't they attract the skilled labor basically at any price? Because it's not there. It's going to be a problem for the industry. It really is. And unfortunately for them, but fortunately for us, that means higher prices are much, much more likely. If the primary producers can't get it done, what does that mean for the developers?
So you're not sounding too positive about Cameco.
Well, I mean, look, they're one of the main producers in the world. They're very, very important for utilities going forward. They've got a lot of assets. They've got a lot of resources in the ground. We've heard whispers that maybe Rabbit Lake might actually be brought back online. That is really interesting. They shuttered that mine in 2017, if I recall correctly. For that to come back on, they have to be very optimistic about a pricing environment for Rabbit Lake to come back. They've got some pretty good assets, probably some of the better assets in the United States, ISR deposits in Wyoming, Nebraska. Um, they'll be just fine. They've also diversified. They're kind of vertically integrated with the acquisition of the 49% ownership of Westinghouse, and now they have fuel fabrication. They've got more conversion. They have an investment in global laser enrichment, so that potentially at some point they'll have the enrichment. They'll have every element of the fuel cycle at some point here. So they're vertically integrating. I think they've done a smart job with that acquisition. Of course, it's not just a uranium mining company anymore. But as far as them being able to easily increase production, bring MacArthur back to 18 million pounds a year, get 18 million pounds out of Cigar, that's proving to be a challenge for them. And if it's a challenge for them, how can these other projects that are aiming to come online on time, on budget, how can they get it done if Cameco can't get it done? That's the big message to the market.
Very interesting points. So I want to talk about equity valuations now, Justin. Of course, the spot market, and you alluded to this earlier, but you said the spot market, like it's over $100 a pound now. Numerous players in the market. You said Russia was in there buying, China's in there buying, Cameco, Kazprom, all buying in the spot. Then you have all these financial players that are also participating in the spot market. And I guess my question to you is, we're not really seeing the stocks or the equities benefit from this rise in the spot market. So do you think the spot price has gotten ahead of itself, and maybe it's being driven by all these exogenous factors that really don't represent the true fundamentals of uranium?
I would say no. I mean, the spot price is basically just the going rate for marginal pounds that are being bought and sold in a short-term fulfillment market. So it is the real market, really. The term market, of course, I mean, the two markets are connected. And even though the term price that's published, you can just throw it out the window, it's utterly irrelevant. 3-year forward, 5-year forward prices are month over month being printed at substantially higher valuations than the spot price itself. So the market is showing exactly what buyers and sellers are willing to settle on. And so that really is the real market. It's interesting because uranium is very different from a lot of commodities. There's no paper market. There's no futures market, really. It's not a market that's manipulated. It is a physical market, pure and true. So whatever the price is, that is what someone is paying for it. And that's where we're at, $106 a pound right now. The equities, in my opinion, are drastically undervalued relative to the commodity. And you can see that very easily by charting URNM compared to the spot price. Now, of course, that chart is looking at the price of URNM, not necessarily the NAV of that vehicle, right? So there's a lot more shares outstanding now than, let's say, the previous peak, November 2021. So as a total NAV or market capitalization for the individual mining companies, a lot of them are at all-time highs right now. But of course, the share price with dilution, that doesn't necessarily represent the same gains. With all of that said, I think we're entering this new phase. And I actually was just shared with this morning a report from PI Financial, and they had put together, I'm not going to share their content, but they had put together an analysis, basically taking a few companies in the sector and saying, okay, this is our analysis of their valuation of their PNAV at $75 a pound. This is what we think it is at 105 a pound. This is going to continue to happen, Jimmy, where we have all of these companies that have these pre-production development companies that have done feasibility studies in the last 3, 4, 5 years. And they did these feasibility studies at $45, $55, $65 uranium. They're going to have to update these feasibility studies with 115, 120, maybe $150 uranium. The numbers are going to be absolutely shocking. And we're going to see, in my opinion, a major reevaluation of the sector and repricing of these stocks. Once we say, okay, well, these things are getting way overheated. When we were back at 75, $80 a pound, these things are pricing in $100 already. Okay, well, here we're at 106. We could be at 150 by the end of the year. That's entirely possible. What are these worth at $150 a pound? And in my opinion, Jimmy, and this is really important, This isn't a speculative driven spike. So this is not being driven by the financial players. That's hugely important. This is being driven by the industry, by utilities, by traders, by producers, all in their buying. Yes, hedge funds are buying a little bit. Yes, spot is buying a little bit, but it's not being fundamentally driven by financial speculators. This is being driven by an actual supply deficit, a market lacking in secondary supply, and every player in the market fighting over pounds. That is what's driving this price. And we're not going to see the price level out, let alone come down, until we see liquidity enter the market. Where's that going to come from? Everybody is going to hope and pray that China is just going to take one for the team and dump their strategic pounds into the market. We don't think that's going to happen. And so far, we have not seen any evidence of that happening. We've seen the price double, almost double in the past 4 months. Okay, that's a huge increase. What has happened? It is dry. No liquidity has entered the market. Everyone is holding on to their pounds. Nobody wants to sell here because the price trajectory is so clear. I think we're about to enter the situation where we see the price go well beyond what even the most wildly bullish retail investment speculators think that it could go to. I think we could see that. I really do. I haven't ever used this language before, but this is an entirely new environment here. I don't know where it's going to go, but I do think that wherever it goes, it's going to settle at a price much, much higher than the previously understood incentive price for those marginal projects, which you could argue is maybe $100 a pound, somewhere around here for the low-grade Namibian deposits, for example, right? I think we're going to settle into a price that's much, much higher, and you can actually see sustained prices far higher than where we are now, where miners, developers are going to be able to get into production and sell at those prices. What is Encore, UEC? What are some of these projects worth? What are these companies worth? They're selling uranium at $150 a pound. The whole industry is going to have to reanalyze these stocks with prices that are existing in this new reality. That's where we're headed.
So you're suggesting we're going to see a major reset with the equities?
I believe so. As soon as we see these official reports come out from very respectable analyses and companies in the sector, we see these reports come out saying, hey, okay, this is what it's worth at 100. This is what it's worth at 150. The stock price, we had priced in. So let's say next gen is worth $11 or $12 at $75 a pound Canadian, right? $75 down US, but 11 or 12 Canadian. What is it worth at 100 bucks? 18, 20? I mean, these things are going to be far, far more valuable at these higher uranium prices. It just takes time for that reality to set in. It's going to set in sooner for the investors who are going to recognize this first before the industry actually does. When the industry recognizes it and you see an uncovered large utility come into the market and say, okay, we're going to have to pay $165 for this. We have no choice. When the reality sets into the industry, that's when we're going to see the price of uranium absolutely explode. And from here, and from even higher, the investors are going to see it first. When the investors start to believe that this is not a price spike that's driven by financial speculators and is impossible to understand where it's going or why, when they understand it's being driven by sector fundamentals and they believe that it's going to remain high for a sustained period of time, then they can say, oh, these equities are highly mispriced to the downside, and I'm going to get in ahead of time. And that way, you can actually see this again as a contrarian bet. If you believe that the investors have yet to fully commit to the understanding of this new reality, it's a contrarian bet to be buying here. And I think the uranium equities are highly undervalued to the reality that we're seeing now and that we are going to see in the next 24 to 36 months.
You touched on investors, and I want to ask you about that. You speak to a lot of institutional investors and also retail investors. What's your sense? Is there still a lot of people not involved in this trade? Do you think more investors are becoming aware of the trade?
It's happening, but it's happening slowly. It's really interesting. We talk to all of the big hedge funds that are in the space, right? We have connections with all of them. They still are very much seen as specialty vehicles. This is they're focused funds. It's very niche, and the generalists are slowly starting to come into the space. We've seen, for example, a substantially increased ownership by institutions of URA. It's the most liquid ETF. liquidity is paramount and liquidity is improving. So that's been sort of a theoretical position for a very long time, that liquidity and size would beget more liquidity and size. That if you're managing $1 billion and you want to take a 2% position in uranium, you need X amount of liquidity. That's it. It's more so than price, more so than valuation. Liquidity is paramount. So as the sector gets more and more liquid, we're going to see larger players be able to speculate in the sector, and that's slowly happening. I think that's going to continue to improve.
Well, Justin, that was a great update, and it's always very insightful talking with you. And I want to thank you for making time with us today. If someone would like to learn more about you and your firm and the services that it offers, where can they go?
uraniuminsider.com. We publish a monthly letter. We're focused 100% on uranium. We have a very strong team behind us, very great industry contacts. We do monthly webinars with our members. We've outperformed the benchmarks by a significant margin since inception. We're coming up on our 5-year anniversary this coming summer. Excited for that. It's a very, very exciting time for the sector. We're far off the bottom, obviously, for the commodity and the equities, but like I've mentioned multiple times in this chat, Jimmy, we think we're on the cusp of moving into a whole new paradigm for the nuclear industry and for the commodity itself, and ideally for the equities as well. So yeah, we can be reached uraniuminsider.com. I'm on and off with Twitter or X. It's not spending as much time there anymore, but I can still be reached there as well.
Am I going to get an invite to your anniversary party?
Absolutely. Yeah, you'll be top of the list.
All right. Thanks very much, Justin.
It's my pleasure.